this. Perfect. Okay. It's like the stocks that get it's like the stocks that get the big split, and all of a sudden you just don't see any of the action that was seemingly so important at the moment.
Yeah.
But this one also, this one rig, this one on the weekly looks kind of like what the daily looks like on Tellurian. And I think I set up a whole bunch of long-term spreads for not very much money in this one, like, January of next year,
Mm-hmm.
that kind of thing. And so I'm looking at this and seeing we would still be in the downtrend all the way up here at the upper Bollinger Band, which I'm kind of assuming we're going to start to see. The other thing that I notice in a lot of these things is that the MACDs are crossing back to the upside. I was just doing my chart on lumber for my for the weekly letter.
Right.
And there are a lot of these things that are setting up where the MACDs have already started to move up, and this flow, negative to positive, already started, and it really hasn't moved yet. I mean, since we had the crossover here, we were pretty much right on the bottom, but we've had these really, for this one, really tiny weeks. I mean, who would look at lumber, traditionally a $350 commodity, and say that the range of 469 to 5.25, a $55 range,
Yeah.
is inconsequential, but it
And
is.
if you're looking at a chart, you're not showing it.
Right. I was just gonna.
Oh, okay.
Okay.
So I'm looking, since you're talking about lumber, so I'm looking, I know we have a lot of US, I mean, obviously CPI, and everybody's looking at those types of reports. I don't see much mention. USDA is going to be doing a lot of reporting this week. Who reports lumber?
Oh, no one. Absolutely no one. The lumber is all about, new home sales and interest rates. And when I was writing, you see it now, right? Don't you?
Yeah.
Okay. So this is what I was talking about. The flows in and out, down here at the bottom, it got to be the worst, but when it turned back to the upside, it was obvious.
Yeah.
In here, we've had the crossover here 4 weeks ago, 5 weeks ago, and we've seen the flow turn positive here, and we really haven't seen anything here in the actual commodity. But one of the things that people are now talking about, the woman who's on CNBC, the one who does the real estate, Diana Olick, she's been talking about that on the same house today, with rates where they are, the cost to carry is double what it was in January.
Okay. Yeah. And the other reports I'm hearing too, more out of the Home Depot side, because they have more professional
Right.
accounts than say Lowe's, but even they've not seen any slowdown in like handyman or those activities, whereas in the consumer side, like Lowe's has seen a slowdown. But yeah, so there's probably still demand for lumber from those professional accounts at places like Home Depot and such.
Yeah, I would think so. And it's still not cheap.
Right.
I mean, 510 is still 40 or 50% over what
Yeah,
the traditional price is. I mean, you go back here and you see, for the most part, this would be the high end of the range.
yeah.
But
Well, I mean,
this
yeah,
is pretty impressive though, when you
yeah,
look at it this far out. I mean, and this is the way that commodities trade.
right,
It's, in the futures market, I hate to put it this simply, but it's not over till it's over. And a
right.
lot of these things are breaking out. I will show you something that I picked up a little of for myself on Thursday and Friday. Let's make this small. Daily. I mean, look at this consolidation.
Mm-hmm. Oh, I picked up wheat this week.
Yeah, as a matter of fact, I think after you posted that, I went in and I bought the October 9s, I think is what I bought. They're
Okay.
slightly, I think they're slightly in the money. Let's see. DAT.
Well, from what I'm gathering, kind of, it's really not a whisper number, I guess, in these from the USDA, but I think there's consensus that the yield reports are going to come down. They're going to come in under expectations, which is going
Yeah,
to it's putting a squeeze on wheat and corn right now.
yeah. With all of the stuff that I saw that I posted yesterday, I think, in the Discord room, all
Mm-hmm.
of the Putin information. I
Oh
mean,
yeah.
it's now gone from the oligarchs disappearing to, groups who are saying, we want this guy out of here. He's ruining things. And then you have the Russian army guys shooting themselves in the leg so that they can collect the 3 million ruble, which is the equivalent of about $50,000 for the injury and be sent home. I
Mm-hmm.
mean, it's pretty amazing the way that things have seemingly reversed there. Or, I mean, I'm not enough of a student of war to know. Um, I just assume that there's an ebb and flow to all of these things, a change in advantage from time to time.
Well, I imagine there's also some thought at this point of, do I really want to be doing? I mean, winter is coming to Ukraine,
Yeah,
right? And there's, speaking as an infantryman, there's that the worst job to have as an infantryman, in the winter. I never served in Germany or anything, but I definitely have heard. But yeah, so too many unknowns. I know, like the chart that you're showing there. I know for me as a trader, I like to see a MACD moving. The worst thing is that MACD that is hugging the zero line
right.
and is doing nothing. It's so difficult to call the ball on something like that, and the crosses are not clean. So I like what I'm seeing in those commodities.
Yeah. And uh, what amazes me, I mean, I was looking at energy in general,
Mm-hmm.
and this is the crude. I was really surprised to see it break to down here. But, a couple of weeks ago, I started talking about, regardless of what the fundamentals are, just looking at it technically, we have a blow off top, we have a higher low, and now we have a series of lower highs and lower lows. Where it goes, now I sound like a carnival guy. Where it goes, nobody knows. But
Nobody knows.
this is the weekly, and these are pretty major areas for breakouts. And we're getting a little on the oversold. I mean, I think I wrote in tonight's note, because I already did this one yesterday, was that we've only had 7 or 8 up days in the last 32 trading days, which makes it kind of, oversold. And then we had this move right back to the breakout on Friday and or during the week, and then closed, basically unchanged on the week. I don't think it's going to roar through 100, but we could certainly get back up into the 93 to 95 area.
And no matter how many times, I'll always go to the product depth chart and look at the crude futures. I
Right.
mean, there is just no change. It's still massively in backwardation. I'm seeing, no flattening of the futures. So these gyrations in oil, even though, oil and natural gas are going to be two different aspects come this winter, especially in Europe. And
Right.
yes, I hear about more people switching over to oil and burning fuel oils and so on and so forth. But
Well, here in this area of the
yep,
US, it's all heating oil.
yeah,
And
you
what's
guys too.
interesting there,
Yep.
and I know that I wrote it up in the energy comment this week, the fact that there's a major divergence between crude and the distillates. And in the distillates themselves, you get gasoline
Mhm.
down 40 or 50% from the high, and continually lower. I mean, unrelentingly lower day after day after day, in the grand scheme of things. I mean, it was up almost 9 cents on Friday, but you see this is a move from
You got to put
430
the chart up.
to 220 or 230. And so, you look at that and you say, well, okay, there's a 40%. But then you go and you look at the heating oil, and the heating oil looks nothing like that at all.
Yeah,
I mean, look at the
yeah.
heating oil. The heating oil is in a consolidation. I could see it coming out of the top of this. The other thing that I think is really important for people to understand about energy right now is the fact that we've now taken 26, this is as of July, we had taken 26% of the strategic petroleum reserve out.
Mm-hmm.
It's at its lowest level, or it was at its lowest level, and has only gotten worse since July.
Well, I'm hearing rumblings that
All
they're
the way
looking at
back,
releasing more.
yeah, all the way back to 1985. And, the part of this that a lot of people don't think about, first of all, this was set up for crisis, not midterm election political crisis, actual crisis.
Well, like
And
war. I mean, it's
right,
strategic.
yeah, and we certainly don't have any of those going on. But more importantly, the first 150 million barrels were put out not as a sale, like the recent stuff is a sale. They're put out with the energy companies as loans. And the Baker Hughes rig count that came out this week showed yet another decline. So
Right.
rigs have declined from 1,080 2 years, 3 years ago, down to the 675 to 700 level. And so it's clearly not going to come from production, which means it's going to come out of the market. And the short interest in stocks, in all those meme stocks, I mean, I think people need to start to understand that's what's being set up in oil. And when the short interest gets as high as it is in a stock, you get, as what's his name? Tom Lee, the guy from
Mm-hmm.
Fundstrat, I think,
Yep.
who's always on CNBC, what he
I know
calls
'em.
a face ripping rally,
Right.
or a rip your face off rally. And in futures, it just gets more and more extreme.
I just
So
don't see any, so knowing the historic nature of, going into, so we've got the ban coming up on, against Russia, December 5th. We've got Iran, are you in or are you out? We don't, so there's so much going on that I just can't not be, both from trading perspective. I have exposure more in energy and probably soft commodities now than normal. But also as an investor, right? I'm buying the juniors, the explorers. I'm buying midstreams. I just feel very compelled to participate in that part of the market right now.
yeah,
Yeah.
well, like as I was saying over the last couple of days in my personal account, I'm long almost exclusively commodities. I'm long
Yeah.
wheat, I'm long nat gas, I'm long the UCO for for the oil. And what's my other, let's see. Oh, and I'm long silver. Boy,
Okay.
silver, this is a market that is so dramatically divergent. And I keep on mentioning it, but I keep on seeing all these major divergences. You look at the gold market and you see, you know, a pretty extreme downtrend. Of course, 1700 is a huge area, but you look at the silver. So while gold was up $6 or 0.3% this week. Oh, that's oil. That's not what I want. I want silver.
Go ahead and throw the chart up too, if you would.
Yeah, I'm going to. There.
Okay.
Um,
Nope, don't see it.
okay. Let me just find this screen share.
Oh, something's coming.
Yeah.
There we go.
Gold up $6. Silver up 88 cents.
What did the dollar do though in relation?
Oh,
Did
the
the
dollar came
dollar?
down.
Yeah,
Dollar
so there
came
you
down
go.
hard. I mean, it was 110 and high change on Wednesday or Tuesday, and it closed, under 109. I
Mm-hmm.
mean, it's done this before. As a matter of fact, it's done it repeatedly all the way up before. But closing down on the week after making a new high, I mean, is it going to break 105? I don't have a clue, but could it get there? Absolutely.
And that's your um
That's
purple. That is an 8, or is that a 10?
which?
Your purple moving average, that
Oh,
top one.
that's the 5,
That's the 5. Okay.
and this is the 20, 5, 20, 50, 100, and 200.
Yeah. Well, I mean that 5. I mean it's still clearly, it hasn't even really
Yeah,
flattened. So the
they're all.
idea of it. Yeah. So the idea, you can see even where in May, where you had an extended period of flattening of the 5,
Yep.
right? It still didn't come down to the 20.
Well, that piece that I put out is really hard to ignore. The one that I grabbed off the internet, the milkshake theory.
Mm,
I
yeah.
mean, you have to, I'll tell you what could hurt the dollar. I mean, I say hurt the dollar, but from my perspective, it would be overwhelmingly positive, is something happening with Putin.
Right.
You have the two biggest pieces of the basket in the German, the EU, the euro. I think the euro is 65% of the basket. And I know that the Japanese yen is also a big piece of the basket. So if something were to happen on a positive note there, I think you would start to see, at least with the euro. I mean, I think you could see a hell of a bounce in the euro, and that would take down the dollar hard and fast. My concern now is that, they keep on talking about the fact that they're going to have to close down that huge nuclear power plant. And, with Putin getting so much pressure internally now, as opposed to just externally, I think that, there's a good possibility that he may be, the cornered rat,
Oh, yeah,
and God knows what he would do.
that's
On
the
the other
most
side,
dangerous kind.
if on the other side, if somebody shot him, things would change fast. But, historically, our biggest problem with change of control in Russia is because it's such a closed loop system. We don't really have a clue who's going to come in, and more importantly, what are they, what's their background?
Well,
I mean,
I would imagine, and that's probably, I don't know if there's one better scenario than the other, because if let's say he does get assassinated, can you imagine the power struggle
oh yeah,
that's going to be ignited and the chaos? So at least he's a known.
well, that's what I'm saying. It's we don't have a clue who's going to replace him and what their attitude is going to be.
Yeah.
I mean, there are plenty of hardliners on both sides.
So the thing I noticed when you asked me if I was looking at charts, the thing I was noticing, especially when I look at the option chains on the VIX,
Yeah.
there's some big positions being taken far out of the money, like 60 VIX, 70 VIX, and going into like in December. I'm looking at the product depth right now, and we flip to some pretty heavy backwardation in October, November, December. Right now we're in contango. Yeah, we're in contango right now. But it drops like a rock in October. So I'm just wondering, I don't know if is the market getting nervous about China, Taiwan? There's some big contract sizes out there.
Oh yeah.
Way out of the money.
And what's interesting here to me is we're having the same kind of action that everybody was so bored with for so long, in the 15 area. And then now in the 17 to, let's call it 22, 23 area. And we're getting so quiet again. I just don't know what to think. It's as you point out, there's a huge difference. And I notice it in stock options all the time. I mean, sometimes there's so much size, bid and ask, even versus pretty minimal open interests and volume. I mean, I see things that have an open interest, in a quiet option, where the open interest is, 800 or 1,000, and the volume might be as low as 50 or 100 a day, but there's an 800 bid and a 750 contract offer there. So there's plenty of attention. It's just not participating yet. It's more, I think it's more of I'll pay for direction when I see it kind of attitude.
Right. Yeah. All across the volatility complex. I mean, whether it's the VIX, we got a skew at 119, rarely low at 119. VVIX is super low. There's just nothing going on in the volatility complex.
Yeah.
Which, that gets my attention, and I'm just so tempted just to throw, in case there's some, what's the word, exogenesis,
Right.
some
Black
external
swan.
shock,
Yeah.
some black swan that's flying around out there that we can see it. We just don't know when it's going to crap on us. Like, conflict in between China and Taiwan. I'm just so tempted to put out, just put some VIX positions on in November. And I'm just wondering again, and for people that will watch us later, a lot of this is speculation and what have you. And hopefully in the future, if people can't attend, at least they'll post questions
Right.
that we could possibly address. But I'm tempted just to throw a VIX spread out there, like 60-80 in November, do to like a 60-80 spread, pay 30 cents for it, and just have some stuff sitting there.
I just had a trade on in my personal account recently on the VIX. And I was looking for a big move down. 1 second, I'm going to go somewhere else. Seven. Okay. Do I have a stock chart up? Do you see that?
Yeah, where you got wheat chart up.
Right.
Okay.
So I saw the market coming down in here back in the 3rd week of August. I think that was when it was. Okay. So I saw this drop right here coming a mile away. And what I thought was, I'll go with the VIX. Here's the day. I got one day down, and as we continued to go lower from here in the market, as we continued to go lower, we went essentially from 4,200 all the way down here to 3,900. Do you know that they expired worthless and that I never had a chance to sell them up on the day, ever?
Oh, really?
Not one single time. I mean, how does that happen?
Yeah.
I mean, how do you see call the move 42, let's just call it to 40, and say it was a 5% move in the market, and at the same period of time the VIX goes from essentially 30, I was trading the 34s, so you see where I was.
Yeah.
I was just looking here the entire time. This moved counter to the market. I mean, this is one of those that I put on my no-fly list, because obviously there's something here that I don't understand about how this operates. Same thing here. I mean, here's where the break was, got one day of action up, and then when we got to the expiration here, they were worthless. So that's just something I'm not going to play anymore, I think. It just doesn't make any sense to me. I'll tell you, the AAII numbers have only gotten worse, or better, if you want to think about it that way. We were down another 380 in the bulls, down to 1810 18.1. I mean, that's a really big decline. And that's a
When does
huge,
that,
that
is
was
that a
at
Friday? That's a
Wednesday night.
Friday number? You're a
No,
Wednesday.
Wednesday
Okay.
night.
Okay. I didn't even look at what the COT report was.
What the which report was?
The commitment of traders, the
Uh,
COT report. CBOE COT. I thought there had been some, I don't like this FTC's charts. I use Trading Stir for that. Let's see. The E-mini. Legacy report.
You know what the commitment of traders was really strong with in the last couple of weeks has been the copper.
Oh, really?
Oh, yeah. And it's, it's not doing much. That's the other position that I have. I forgot about. Yeah, I own the CPER.
Yeah.
22s for next month down here in the 2090 area, close 2137. So those have operated, those have actually worked out pretty well so far. But again,
Yes.
you get this MACD, it's already moved. Is it going to roll back to the upside here? Again, kind of looks like it is. Relative strength looks pretty decent. But, you think about the fundamental side of it, and that's what I'm trying desperately not to do. But you look at the fundamental side of this stuff, and you just say interest rates up, housing sales down, manufacturing so, and then you have to fall back on the EV charging industry. And, it's just a hope mode. And every single one of these EV companies now is going through the same stuff that Musk went through 2 years ago. And I can't imagine why, but it seems like a big surprise to them that they're going to have to raise more money, or that there are shortages of batteries. I mean, it's not like they haven't been talking about it for the last 2 years.
Right.
And
Oh, yeah.
yeah, it won't be a problem. And, I see the biggest piece of the problem here as consumers paying $20,000 more on a $40,000 Chevy Equinox to have the Chevy Equinox electric.
Yeah.
Is it really worth 40 or 50% more? And of course,
No,
every time you see the ad with the price, it says, as shown, as
right.
opposed to with what you actually want in it.
Oh, yeah. Well, yeah. When I go to the Volvo dealership and I look at their Polestars, yeah, I mean, that's just the reality of it. And then there's at a certain point that the addressable market for cars in those price ranges are going to exhaust. And yeah, California is giving it some tailwind, but
Oh,
even
yeah.
now, this time of year, I'm seeing articles about how if you're going to be an EV owner in the north,
Right.
It shouldn't be your primary car. Chances are you're a 2-car family. You use the EV for short trips because, if the battery, you can't fully charge it and you don't want to fully run it down. So there's that sweet spot in between. And then the cold temperatures take another. So really your battery life gets really limited. And, the consensus, for me, yeah, the
What do these
consensus.
cars, Dale, what do these cars weigh?
Oh, great question. I have no idea.
I mean, I'm just curious if they're heavier or lighter. And when I think about driving, here up north,
They
during,
got to be heavier.
yeah, yeah,
I mean,
well,
those battery
that would
packs got to be
actually
heavier.
pretty much be a positive as far as I'm concerned. But, but the fact that, if you're running it at night and you're running it in the cold and you're running the heater at the same time, I mean, I just can't imagine that, the drain on these batteries is not going to increase and their reliability.
Well, that's the consensus I'm getting. The last article I read was a guy out of Chicago, and he's saying the same thing, is that, EV owners, again, they're more affluent. They have a garage, they have a charger in their garage. It's a second car. And I've made the point, years ago in the Discord is anybody that lives in a city, Boston's going to be the same way as Minneapolis. When you get in the city, people park on the streets, right? There's a lot of street parking. Where the hell are these people going to be plugging in? I don't know.
Right.
So, I mean, I'm all for it. Hey, I'm all for it because I like the fact that I hold lithium. I like the fact that I hold copper miners and copper.
Right.
Great, go for it. You know, the fact that an EV car uses 2.5 times more copper than an ICE vehicle, I'm all for it. Will I ever own one? Probably not, but I'm all for it.
You know, it was funny. We had a condo association discussion about a month ago, you know, an annual, and it actually came up. You know, we don't have garages.
Mm-hmm.
We have, you know, we have great service when it comes to, you know, the snow. The guy shows up here, clears everything, you know, where the cars aren't parked. People go out and they move their cars and then they take care of all the rest of it. But, you know, one of the owners said, what are we going to do about charging, electric charging?
Mm-hmm.
And by the end of the discussion, it was, okay, we'll worry about that when somebody buys one. But the school that is, you know, 60 yards up the street has 3 charging stations there. And
So go park at the school, huh?
Exactly. You know, we'll leave it there.
I mean, it's a small thing, but you know, I live in townhomes. It sounds like you live in condos and townhomes too.
Yeah.
I mean, will the non-EV drivers be okay with association dues going up to pay for the charging
they won't.
stations for a few people?
They absolutely were talking about the fact that
No. So I don't know.
It would be on the owner.
Right. Yeah. Yeah. Should be. Yeah.
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 And-
Or yeah, exactly.
And that's, you know, that's money that you spend that I'm guessing you're not getting back.
Right.
Unless-
Now, the interesting thing that the interesting news out of the EV world, I don't know if you caught it, was the deal between, who was it, Mercedes and Rivian this week?
Oh, I didn't see it.
Yeah, apparently they inked a deal. Let's see. Let me see. I believe it was Mercedes. Rivian.
What's
Right.
interesting to me is that a lot of these EV deals are now talking about only of eliminating their low cost entry in favor of you know, in favor of the higher end.
Yeah, so here it is, but this is more truck. So this was reported yesterday. It looks like all the reports are from yesterday. Rivian and Mercedes-Benz vans on Thursday announced plans to launch a partnership to manufacture large electric vans for both automakers. But you see those Mercedes Sprinters vans. Yeah. So that's probably what this is about.
Yeah.
And
they're not very big. I mean, I could see where a plumber or a local business would like that, but you know, it's not a heavy duty vehicle.
It's not a heavy duty vehicle. And it's also the kind of thing that while it's at the shop or the business, it can be on the charger. And right. So anyway, that was interesting. Rivian. And yeah, so, but well, I'm still holding my Hyzon shares. I'm just going to hold on to those.
Which ones?
Hyzon, HYZN.
Oh yeah.
Yeah. I mean, there was it sounds like some shady accounting that they got in trouble for, but at this point, I'm just going to hold on to it, but they're more hydrogen. So, so what else do we have? So I think you and I, there's consensus. It's kind of energy. It's kind of commodities.
I think so. I mean, I think that these commodities are going to have another run. The other thing that people don't really understand is that when they talk about not giving up until until inflation is back in their target range. My guess is they're going to double the target range to 4%, and it's still going to take them 2.5 years to get there. And who
Mm,
knows what they're going to break in the meantime.
right. Yeah.
And so that's a real concern to me. Um,
So here's, so for me, I mentioned to you, like in chat, that I had struck up a conversation with Brian Belsky,
yeah,
who I liked. Anytime I saw him on CNBC, I said, there's something about that guy. I don't know why I like him. And then
no,
I
I
caught him
think he's
on,
very level-headed.
yeah. But then as he was doing his presentation, he said, yeah, he was with Piper Jaffray. He mentioned Piper Jaffray. Of course, that's here in Minneapolis. He said, yeah, I'm
Right.
a Minnesota guy. And I said, oh, okay, well, that's why I like you. You're a Minnesota guy and you're about going, Wisconsin, going to Lake. But anyway, I've known Tom Lee for a number of years, going probably
Yeah,
2016, because he was a Bitcoin bull
right.
early on. And I reached out and connected with him, back in 2016. I saw him at the Traders Expo in Vegas and chatted with him a bit there, but he's I've never known him not to be bullish,
Right.
honestly. But so he's always bullish. Belsky was very bullish, not very bullish, but he's bullish. But then you have other ones like Miner, who's looking for, nope, we're going another 20% down from here. So it's very difficult right now as a trader to hear these two sides and form a position, even though I think we both always say that, don't worry about having a bias of where the market's going to go. Let the charts and, just
Yeah, right.
be
That's
flexible.
the biggest thing right now. You know, um, uh, Dennis, my commodity trader. Who's the guy from Satori? Um,
Mm.
Dan Niles.
Oh, Niles. Okay.
And
Oh, yeah. Yeah.
Dennis talks to him all the time, and he says he's pretty negative. But
Yeah.
I look at
Yeah.
this. I look at this chart. Honest to God, this is the daily. How do you not buy this chart? And how, if you bought this chart, do you look for less than 33,000 on it? It's the Dow.
Oh, the Dow. Okay. Oh,
I
the
mean,
DJ, a Dow
I mean,
30. Okay.
you know, we have the MACD, we have, RSI, we have it coming
Well,
lower Bollinger Band. I mean, if I owned it or if I wanted to trade it, I'd certainly be out at 32,750 or 32,8. But
so
you
what's your red line? Is that your 200?
this one,
Yeah.
that's the 200.
Okay. So we could say, I'm trying to hold a very, I don't want to say broad view, but kind of apply some big rules to it, saying, you
Right.
know what, below the 200, you're short. Above the 200, you're long. Or in this situation, below the 200, reverting back to the 200, right? You could be long back to the 200.
Yeah. I mean, this solid red line here,
Mm-hmm.
that's from my perspective, that's the reversion to the mean. That's the
Okay.
75-day linear regression.
Okay.
And so I look at that and I just say, when it's down here and against the
Yeah.
lower Bollinger Band, you got to think it's good. But the problem with that is here, it was at the lower Bollinger Band,
Right.
and that was 32,000, and 4 days later we were 31,000. So
Mm-hmm.
it's I think you have
Well,
to see the turn before you even bother with it.
so when you're applying those things, and then for people that watch the recording, because I do hear the question a lot, or I do hear the comments a lot in the chat, is that I don't use spreads or I don't trade spreads, right? It's a single leg trade or something like that. And this would be a perfect situation where you can define your risk in that situation by giving yourself an upside target,
Right.
right? And so you're trading the
And the
spread.
upside target's easy.
Yeah. Yeah.
It's 41.95 in the S&P.
Now, granted, for people that are new to trading or or if you have a certain mindset, if you're looking for the home run trade, this is not going to be a home run trade for you, but at least you're defining your risk. You're countering your theta decay,
Right,
right, with the spread. So there's a lot of upside to using a debit spread.
right.
Now, granted, you're defining your return as well, but you got to be okay with that.
Yeah. Well, you hit enough singles and doubles, it doesn't really matter that you don't hit home runs.
Like I said,
And every once in a while, it's a home run's going to sneak up on you anyway.
yeah, like I say, the baseball season is won by base hits, not home runs. So,
Right. Yeah.
and that's the situation, applying what you have there on the chart. And then for people that watch this, if you define those, just like I don't know if I put it in the comment, but when I put on the expected moves for this week, the upper edge of the expected move is in alignment with a lot of a level of high interest, where previous lows and previous highs, going back several months. So I would say consider using spreads more.
And
in your
frankly, there
trading.
are a lot of things. I'll give you the one that I would use a spread in every time. Oil.
Okay.
It's 3 times.
Oh,
It's got an incredibly high volatility. And so the options are dramatically expensive. I mean, here we are, we're at 79. Let me tell you where you have to be. With this at 79, let's just see. Oh boy, okay. Screen share here. Okay. For this week, Friday, we're at 79. The 89s are $3.
and Boyle is what? Nat gas?
Nat gas triple.
Yeah. Okay.
So in this case, you look at it and you say, okay, I like it right here. We're at support. I could pay $6.15 for this. And I can put on a $10 spread for $3.
Mm-hmm.
And it's the same situation if you go out to October. Of course, the difference is that in the Octobers, you're looking at every dollar after 80, but below it, it's every $5. But you look at these and you say, okay, I could buy an 80 for 16. I can have a 90 that I'll get $13 for, $12.95. And so
the thing I will
go with a $10, and it gives me 6 weeks to do it for me to make $10 on a $3 investment.
Yep. So the thing I would mention to people that don't use spreads a whole lot, and stay where you're at on that, because look at that. Look at your short leg was going to be what strike?
90s.
Okay, so look at the 90s. So what I'd tell people to notice your bid ask, notice your spread, 270, 1320.
Right.
So here's the thing with those is if you're used to trading a single leg, and let's say you bid the mid normally and you get quick fills or what have you, if you start doing spreads and you start seeing, you start seeing, a lot of slippage, just know, and Cam, this, but you're probably going to have to work the bid a bit to get, you can get that quick fill on that single leg, but it's that out of the money leg.
Yeah.
Especially if it's got that slippage, you're probably going to have to work the bid a bit.
Right. And on the way out, you're going to have to give, even if it's in the money, you're going to have to give the market maker a couple of cents for him.
Yeah. And
get out.
And that's where I always say, I'm going to sell into strength. I'm going to sell when it's going my way. I'm not going to wait till the turn. Once it turns on you, you're chasing that bid.
Yeah.
So be okay with, even if it doesn't get to your short leg, right? If you're
Right.
not on max profits, if you get a double out of it or something like that, I'll take an exit and say, I'd rather sell into strength than try and chase it on the turn.
The other
Because
thing, the other
nothing
thing,
more frustrating than trying to get a fill as the bottom's dropping out from underneath you
right.
and trying to get chasing that fill.
The other thing about spreads is you take a look at, Tellurian. And I only know because I have a good friend who is very heavy in this. He owns 400 spreads.
Wow.
And his 400 spreads are way out here in Jan 24. He's got Jan 23s and Jan 24s.
24s.
Let's look at
24s. Wow.
Yeah, let's look at the Jan 23s. So the stock is $4.50. And what he does is he goes all the way out and he looks at, let's say, at the money,
Mm-hmm.
4.50. So he looks at paying $1 or $1.02 for that. And he looks at the eights. Okay. I mean, a couple of months ago, he was putting on the 250 to sevens at 60 cents.
Okay. Yeah.
250s to sevens, a $4.50 spread for $0.50. And you get these kind of extractions, and because nobody's interested.
Right.
And even look, here's Jan 23. Look at the open interest in the sevens,
Wow.
25,000, whereas at the money, it's only 5,000. So I'm going to, so looking at these spreads, I think that you'll find, or anybody who watches this and wants to look at it, I think that you'll find, if you're really long-term bullish, like I am on Tellurian, this is an excellent way to play it. I mean, if you think Tellurian is going to $20, a Jan 6 to 10 only costs you 40 cents.
I'd be curious. So can you change your columns? Can you go from open interest to IV?
I don't know where it is on this.
Oh, okay.
Wait, let me look at something here. Columns. Okay, these are my choice.
I mean, I don't want you to change.
No,
stuff,
I'm looking. I'm looking at these things. Exchange, gamma.
You should have IV on there then.
IV percent.
Yeah.
I never even knew it was there. Okay, so here we now have the IVs.
So you're buying the which leg? You're buying.
I was buying the, let's call it the sixes.
Okay, so you're buying a 93 half.
Yeah, this is interesting because on the tens, it's actually higher.
Yeah, so that's the key. And I've shared this in the Discords a few times, is the idea is, and I've always said that, as traders, we're actually buying, and so we're trading volatility, not necessarily price as much. So when I'm looking at that spread and I say, I'm buying the, whatever it was, 94, I'm buying it 94 or whatever it was, 93, 93 half, right?
93 and a half.
So I'm buying the 93 half and I'm selling the 97.5. I'm buying it cheaper than I'm selling it. Does that make, hopefully people that are watching that makes sense.
I get that.
Yeah. So that's kind of the key. So when you look at that and then, so I like looking at open interest and things like that. I like looking at IV because if I'm setting up a spread, I want to make sure I'm selling a higher IV. Now, the thing I noticed, if the IV is too high, it can make for a very ugly thing to hold.
Yeah.
That has really got to be a directional bet in that
Now
case.
look at this. Here's the open interest in the Jan 24s. The biggest open interest on the entire page, except for the twos. None of the at or near the monies. 7, 10, and 12 are the highest open interest.
Okay, yeah, yeah.
Amazing. All right, well, I'll post this after it records. And thanks for the time today, Dale.
Yeah, no problem. So
Anybody
yeah,
who watches it, sorry you didn't participate, but we'll do it again.
yeah, I would just mention that for people that commented that you weren't being able to participate today, please do. If you have a question, please post it.
Yeah, absolutely. All right, I'll talk to you tomorrow.
All right, Cam, take care.